Hi, Jeff.
Yes, sir.
How are you?
Fine, fine.
I have shared my screen, so I believe we should be able to carry on from here without issues.
Okay.
This is the template we were using yesterday for yesterday's technique. So I believe you should be able to raise your concerns regarding yesterday's technique. I should be able to clear them, and then we move on to technique number 2 for today. So over to you. Tell me what challenges you were facing as you were testing it, and then we see how to proceed with it. You can use the annotate to indicate things that you want to explain. Yeah.
I think it's a simple technique. I understood well.
Yes.
As I told you, I don't think it has issues of clarity.
Mm-hmm.
The only thing that by following the rules that you stipulated,
Yes.
making sure that observing the trend,
Yes.
observing to make sure that the candle that breaks.
Yes.
If it breaks in an uptrend, it is below the zone. If it breaks in a downtrend, it's above the zone.
Yes.
And then patiently wait for the market to come to the lower or the upper zone, depending on the trend.
Exactly.
And then the trend to end on the time frame of the candle.
Okay. But you find
But I think we would address on the issues I raised on the questions I raised.
So you want me to go to Telegram, then we are able to look at the issues?
Yes.
All right. So
yeah.
You started sharing your cases here. This is case number 1 that you shared.
Yes.
And we are above the moving average, meaning an uptrend. You have identified a bearish 2-bar reversal pattern. You waited for a breakout, and this one touches, and it's a winning trade. There is no issue with that, right?
Okay. Are the levels okay? The zone.
The zone is okay. The zone is okay.
The lower one is okay.
Which one? The lower one? The lower zone is fine.
Okay.
Because you at least you were able to cover between the wick and the body. That's the most essential part.
Okay.
Yes. You know why the body for the red candle above there is important is because that's where the seller started from. Exactly, that is resistance. Then for the next part, you still have an uptrend. You identified your zone here. Let me show that I can be able to get, but if I get this one, to start confusing things. Spotlight. Okay. You're now able to see that clearly. So you have this zone here. You waited for a breakout above the zone, fast touch, and that gave you your winning trade, right? No issue there. We have this setup. You identified your zone. We are in an uptrend. You waited for a clear breakout. This one you are indicating as a loss. Now, this is where I needed to explain something, and that's why I needed you people to test. You look at this candle here. This candle touched the zone and rejected it. That made it a weaker zone. So if you see a candle coming and touching the zone and rejecting it the first time, the second time it may break it. Okay? So when you spot this, the signal becomes weaker. You will start considering probably avoiding it. So going back to your first setup, you realize the breakout, the first candle that touched, there was no other touch before that, right?
Yes.
This is the first signal that touched the zone. No other candle touched it before, okay? All right, so I just want to clear some of these issues. Then next is this is the one that you were raising a concern on. Before this candle came to touch your zone, another candle had tried to break the zone before. That invalidates your setup. This one here, you see, this is the first one that touched and worked very well. If a zone has been attempted a few times, like now touched, you see the next candle will go all the way up. Then we have this setup again, breakout, the next candle. I tell you, the best setup usually is candle number 1 or candle number 2 touching the zone. Yes, because we expect in a natural market, after a breakout, the next candle should retrace. So sometimes it doesn't happen. Maybe the second candle after that or the third. Zikiwa nyingi, there's a problem. When you have more of those, there's a problem in most cases. This one also appears to be okay. Let me see. You identified your zone here, a breakout below the zone, and then touches the first level, and that's fine. So that was okay. I think you just mastered this quite quickly. So here, you identified your zone here. You see this candle did not touch. You get the idea? This one did not, okay, this one broke. This is the first one that touched it. Now look at the second one that touched it. It closed right inside. And the next one that touched closed above. So that's why the first touch is the most important. So if there is a previous touch before the actual touch of your level where you're supposed to enter trade from, you're supposed to skip such signals. Also remember, in actual market, you have noticed the working signals for a call or for a put like here, the candle did not start by going down. There is no lower wick as you are seeing. It just opened and started going up. Like I explained, if you see it going down first and then changes direction and goes up, it might actually end up closing down instead or closing up. So also observe that. Which one is that we've seen? This one? No, we've not seen this. So what about this one? This one, you have drawn your level below the moving average, meaning you're supposed to be drawing a level below the candles. But now because the candle closed above, okay, this is the active signal, right? This is the active breakout. The breakout happened above the moving average. So that might tell you the market is now switching to an uptrend. In a case like that, you can actually take the setup. Because we are broken above the moving average with the current candle. The breakout candle is saying now we are bullish. You may consider taking a setup. Although ideally, if you want to trade pure setups, you can avoid such signals. Yeah. Because whenever the line is in between a candle, this bullish candle, the line is in between. This is a typical ranging market. So here you might expect anything to happen. Bears push it down, bulls push it back up. So it's not a very safe entry, this one. And from there, I think,
back. Just go back there.
Yeah.
Go back. I can observe.
Yes.
This was a breakout here.
Which one? Here.
This kind of broke.
Or behind here.
Yes, and it seems this would have been a loss, isn't it?
Not a loss because the level had been touched before. That's what I finished explaining. Look at this.
I'm saying.
Yes.
You see.
That is your zone, correct?
That's my zone.
But you see,
it has been touched by this candle.
The candle touched here, but not above the zone.
These two candles.
Huh?
Okay, I get it. Yeah, I get
you understand? Yeah, this candle tried to break but stopped, meaning the zone becomes weak, so you cannot trade the next attempt to touch. If this candle had gone all the way up, you should have entered. Okay?
Okay.
All right. Make sure you clarify everything, just be clear about everything so that when you are trading this, you are confident. Then we move to the next setup. Where do we see it? If you share that, we have this. And then this one, we are in a downtrend. You see this zone here, you create one, you wait for market to go back up, touch it, and that is it. So this is a clear. Oh, no. This one again is invalid. You understand why?
Yeah.
Because after the breakout, the candle did not touch the upper level of the zone. So you should not trade the next one.
Yeah.
Okay. You see how that simple filter eliminates all the losses. So in all the setups you had, actually, you probably do not have an OTM. And it's good you raise that up because sometimes when you're explaining things, some things might just disappear.
I would address this. This is the last.
This one.
Yeah.
Or it was which one? This one.
Yeah, that one. Yeah, the last one. My question was.
Have we seen this actually? I don't think we just saw this. Sorry.
Yeah.
Yeah, we didn't see this one. Yes. All right. Now you want me to explain what happened to this?
No, not that one. My issue is actually with this breakout. Sorry.
This one.
Could you open? No, the other one.
The last one. This one.
Yes. Yes. My issue is with this breakout.
Which one?
This breakout that I pointed with an arrow.
This one here.
Yeah, you see these two candles don't have wicks.
Yes.
So the breakout is still valid.
Yes. If you don't have a wick, you just draw a line on the body because the high is equal to the open or the close, because a candle does not necessarily have to have a wick. When you have a wick, you cover the wick and the body. When there is no wick, it's the body that is sufficient.
Okay.
So in this case, ideally here, you just needed to draw a line at the highest of the bodies, because sometimes they don't close. The bodies are not exactly at the same level in many cases because of gapping. So in that case, you'd have drawn your level here, wait for the close, touch, and then you push the market up like that.
Okay.
All right. I don't know if this guy is present.
It says I am set.
Okay, let's see whether he joins with that, because the link is up there. So if he comes in, we are okay. We welcome him. If he has issues, we can go back. So I think I will tell you that if you are able to trade these setups alone, and my indication, my suggestion is simple. If on a particular day you choose to trade a strategy, trade it alone. Don't mix. That's what I recommend. Whenever you choose to enter the market and you decide today I'm going to trade breakouts only. The issue comes up when you start mixing. When you mix techniques, you might even lose track of which one failed, which technique made you a losing trade. Okay?
Right.
Yeah, technically, if you are a quick trader, you can even trade it on 1 minute. But I told you the challenge is 1 minute. Rapid price action. Okay?
What of 2 minutes?
2 minutes. You can try that. I think it's okay. Just try. You know, learning requires trying, because this is 1 minute. And if I spotted this zone here, but now you see the zone is so tall, so long. There is a first attempt, so you should not even think of trading it next. This one, try to break it, but not go all the way to the top. Okay, so you have another one here, but this is invalid breakout because okay, it not even breakout. Started like breaking out, but closed inside the zone, so again invalid. So your next level should be here. Do you agree? That's okay. It is a minor breakout. You can't consider that a breakout because it barely closed below the wicks, this candle. So you can just discard that. And you know, price movement in 1 minute is a bit weird. So let's see whether this one was valid. Oh, you have to cover the wick and the body. That makes life harder. See there? There's no breakout because it's opened right inside the zone. So, you know, sometimes you start seeing them winning and you say, let me try this. No, don't do that. Then we see the next one was that. Cover the wick. There's no valid breakout. Oh, this one did not even go all the way up. The 20% or 30% wick is not attended to. I think if you really want to go on lower time frames, 5 minutes will allow you to do this. 5 minutes. Okay? But I think when you try this on lower time, below 5, it will be crazy for you.
Yes.
It will be very crazy for you. That is that. So I don't see any breakout here. Okay. Then we go there. These two. This one did not break out. Started from inside the zone. We go this one. There is a breakout here. No candle went back. This one. Now, when wicks are very long, it's a crazy thing. There's no candle that broke the whole range. So invalid. Okay. Probably if we pick a different pair, AUD, USD, we might get something. This one, you know, when you have mastered this, you don't have to draw 2 lines. You can draw 1. Did you notice that?
Yeah.
You just draw 1. If you are attempting a call, you draw at the body. If you are attempting a put, you still draw at the body. You forget about the wicks.
Yes.
Okay. So like for this one, you have this one and this one. So the most critical is this one. Okay. This one. In which case, breakout. Oh, there was another attempted candle going down, but still, that was a nice breakout. Now you see the challenge when you start getting to lower time frames, but still a losing setup. What if you are tried to break at this? Probably, but I don't think that is okay. Oh, I think I said if you are trading 5 minutes, you need to wait for the candle to go above the entire zone or below the entire zone. Not the touch. The touch is very good for higher time frames like 15, 30. Look at that setup. You see now it went all the way above. So you should wait for it to go above the entire zone and then you try to enter setup. Otherwise, just at the exact level, it can be tricky on lower time frames. Nullified. There was an attempt to go back, nullified. Then where else do we see a setup? Market is live. Okay, let's see whether this up move. Oh, it's a very long wick here. I don't like when I see candles with those long wicks. So now here is this and this. But this one opened where? At the level. Not a very good breakout, although you see that happening. So what I would expect is, even as you trade with the strategy, find other ways of trading it and share with me also. You know, it will be very helpful. Like now, if I identified this one broke above the zone. Sometimes price just reverses from the upper level. But I don't like that. That's a weak entry. I want a safer entry. So I would rather miss a trade than lose money. I'm sure you have been told that probably by other trainers. That's the logic. You're better off losing a setup than losing losing your money. So there's that setup, bear bull. We break below first touch. That would give you some proper result there. We have another one here. Break below. Oh, no, that's not a very good break. Then we have this one. You see? You believe there was a breakout? Yes, because there's no wick again here. So it just went all the way up. And I think that should be able to give you an idea that the logic generally works. Yeah, you believe these are breakouts? I don't like when I see a long wick to the top. You also know the logic. When you see a long wick to the top, it means something is crazy. Here we have this setup, first touch, you see? So what you have here is a gold. This is gold, a golden setup, or a golden strategy, I would say. Just trade it confidently. Yeah. And I share this with my students. I tell them one thing. When I tell you a strategy is 80% winning ratio, has 80% winning ratio, it means several combinations. It means you can win the first 80 trades in a row and lose the last 20 trades in a row if you are trading 100 setups. It also means you can start with 20 clear losses and then you end up with 80 clear wins. It also means you can mix them in that order. Maybe for every first 10, you win 8, you lose 2. And then the next 10, you lose 8, you lose 2, you win. It could be any combination. So sometimes someone gets a very nice technique that works 80% of the time. But when you use it the first time, the market is crazy and you're not aware. So you lose the first one, you lose the second one, you lose the third one. No, this cannot be a nice strategy. You throw it away. You throw it away. The same strategy, if applied the next day, you would be surprised how many wins it would give you. So let us not be very quick to discard things because the market was crazy. When markets are crazy, you struggle. You will even see experts struggling to win. When markets are crazy, they don't care. You've heard of this thing called smart money people. They don't care. When they have decided to push, look at this. For example, this is why overbought, oversold concept is a weird concept. If I drew my support here on this, I waited, this candle did not touch. The next one went below. So I saw the market reversing. There are those who teach that if you see two bounces, then it means the level is strong. Right now, they'll tell you now draw it like this, okay? To cover this, to cover this. Then you see a candle breaking below, and you see this rejection. What is your faith? Your faith says call, all right? And then you see the market ignoring you, still creating another candle, and you see a weak and say, no, martingale, call the next one. All right? And then you try to call. No, I think one candle win rate is not very nice. Let me do 3 candles. You enter 3 candles from here. You are very happy. One, you are very happy again. The third candle, the market decides to punish you, goes further down. Now you say, no. The market is completely oversold. You were using, say, stochastic. Eh? This market is very oversold. Look at that, very oversold down here. Then you say, fine, I will call down for 3 candles once again so that I have enough time. Goes up, you're happy. Goes up, you're happy. The next candle closes below the first one and you lose again. Now you panic and say, for sure, I have seen a double bottom now. Stopped here, went up, stopped, a W shape. Eh? I know double bottoms reverse the markets to the upside. And then you enter another setup and say, because at the bottom might take longer, now let me do something like 30 minutes. Then the market still might play a game on you.
Then it falls down.
Why do you think trading like this would have been a very serious mistake in what I've just explained? Number one, look at where we are. Downtrend. You cannot force a downtrend to become an uptrend.
Never fight the trend.
You are simply fighting the trend, yes. You are standing in front of a train and you are saying, I'm going to stop you.
Yes.
People call it catching a falling knife. You don't do that. This is a waterfall where if you were to use like a Bollinger Band, candle closes below Bollinger Band, you say, okay, I'll buy. Closes again outside, you say, nah, I'm going to buy. You close below, you close, and you can continue doing this. I've shared examples of charts where the market printed up to 18 candles in the same direction, non-stop. That's not a foreign idea in the market. There are cases where you see green, and you can't even stop it. Look at this. And these are 5-minute candles. 1, 2, 3, 4, 5, 6, 7, 8. By the time it's here, you are trying to.
Yeah. Account is blown.
If you were martingale, by that time the account is dead.
Yes.
And this happens on 1 minute, on any time frame. You can see that. The market sometimes just punishes people. And there's literally nothing you can do. The best is just surrender and say, well, the market is right. I am wrong. You give up. And come back when the market, quote unquote, when the market is sober. Or when you are sober yourself. Okay?
Blame the market.
Now look at a market like this and tell me that you want to do a reversal on this market. Unless you are sick. Unless you are sick, a market like this, you are trying to reverse it. Okay?
How now?
You are trying to reverse this market because you saw a resistance here. So a candle touched and you said, fine, I'm going to go down. And maybe it told you, yeah, fine, I can go down. Then maybe you go back and see, okay, I'm seeing a red candle here. I mean, the market might go down and you try to sell. You see another red candle and say, I want to sell for 3 candles. You can't trade like this. You can't trade like that. One of the reasons why you can't do that is in an uptrend, the buyers have more force than the sellers. So you expect more green candles than red candles. So if you have read about the waves, the wave theory, you will already see that the market was moving up for long, went down shortly, went longer shortly, then went all the way up, a very short retracement, long move, short move, very long move, now a longer move, but now it makes another strong move a little bit. So the market's now beginning to tell you that I'm tired. But what do you see from here? From this chart, from those sections, the bulls were controlling the market longer than the bears, longer than the bears, longer than the bears. longer than the bears. Ideally meaning the best opportunity you have is a buy. It's a buy, and you can trade a buy for longer time frame, 5 minutes or that's 5 candles, regardless. But when you try to reverse the market, even for 1 candle, it becomes tricky. Let me tell you why it becomes tricky. I'll zoom the chart and show you. Because when people trade candlestick patterns, you've heard of candlestick patterns. When you have a sharp trend, where were we? Somewhere like here, I believe. You will notice that most of those patterns fail. I think we were here, okay? You will notice that most of those reversal patterns will fail. You will see this kind of dodgy, you win. Take the other one, because of a longer wick, you lose. You see this one, you trace, and if you are late, you lose on this one. You see this wick, you place a put, you win. You can win on this. This one you may win. Depending if you are taking 1 candle, you lose here. Probably you lose here. You lose here. You lose here. You will lose so many of those setups. But you see, if you are taking the opposite, let the market go up and come back down. All right? Now, when it comes back down, you buy for a longer duration. Like now, it gives you this. Then you feel like I can do 3 candles, 5 candles. It comes back, gives you a long wick, and then you say, I can go 5 candles. A long wick, maybe 5 candles. You wait for it to come down. Comes down here, prints this, and then maybe 5 candles. That way, you stand a better chance if you are taking in the direction of the trend, not the other way around. Yeah? So today, I want us to talk about a technique that allows you to follow the market very closely. Very closely. And maybe you can even use IQ itself, if you are comfortable with it. Okay. You're able to see that?
Yes.
Now, this is IQ. I'm even using 1 minute charts. Okay. Now, what you need to do with this strategy is so simple. I'm using fractals. If you don't want, remove them from the chart. Okay. If you want to draw the levels, you draw them manually. But to me, they visually help me recognize where there were swings, because this is a swing. You know that a fractal like this one, an up fractal. Sorry?
It's 5 there.
Uh-huh.
5 period.
This is 5 period, yes. You know that whenever you have a fractal like this, it means the previous 2 candles have a lower low than this candle, and the next 2 candles had a lower low equally. And when you have this one, the down fractal, it means the next 2 candles had a higher low, and the previous ones had a higher low as well. In other words, this one protrudes below the next 2 and the previous 2, and this one protrudes above the previous 2 and the subsequent 2. And in many cases, if you look at fractals, they help you draw clean support and resistance, like that. There's a fractal here, there's a fractal here, and you draw a level like that. This in itself is a strategy. Okay? And I will share with you now. That will be your 4th strategy, because I just spotted it as I was explaining things. If you see a candle stop here, the next candle is red. Another candle at the same level, stop, the next candle is red. If you see another bullish candle stop at the same level, you put on the next candle. Yeah.
That is after drawing using the fractal.
Yes, or even using your naked eyes. In other words, what I'm explaining is this. Assuming you have a level somewhere here, and you will not spot the level until you have spotted the pattern. So you see a bear candle stop here. The next candle is green, starting from the same level with a small wick, goes up. Maybe later on, you spot a red candle coming, same level, maybe with a small wick. Next candle stops, goes up. Later on, you see another red candle come to the same level and stop. Now, at that point, you call on the next candle. It is going to be green most of the time. Sorry, most of the time, the next candle is going to be green. This one. Okay. So what is the logic? When you see bear stop, remember, markets will never change direction without a reason. The reason you see market going up here, non-stop, when you see markets going like this, green, 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 because there is no level stopping them here. There is no level stopping the candles. If you look to the left, if you look to the left of the chart, you will notice there is no level. It was red, 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 red. If you see red, 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 there was no support. There was no support, previous support. So the bears were in full control. Remember, markets will always change to the upside if there's a support, and the markets will change to the downside if there is a resistance. So when you see candles moving this way, it means there is no strong level that can stop them and start moving up. When you see candles starting from here moving up like this, it means from here to here, there is no clear resistance that would stop the market. But at this point, when you see a candle change direction, it means there's a resistance here. And if you go back, you'll be able to see this was a breakout of this fractal support and resistance. So anyway, I don't want to mix you with, to mix so many ideas and you get confused. This is the strategy itself that I'm talking about. So let's see what this involves. You can either use the fractals, like I said, or you can just trade manually, okay? All right, so look at what I'm drawing here. This one may not follow the trend, actually. It works very well, especially if the market's almost like ranging. Look at this level, okay? Stops, reverses, stops, reverses, stops, reverses. So if you were to place a call here, the recommended way to do that, is if there was a gap. You see, like the candle closed above the level, you would wait for the next candle to come touch this level, and then you proceed with it. If this candle had closed right here, very close to the level, like here, then you would call immediately from the beginning of this candle. Now, you might be asking, I've seen many of these things on the chart. Why have I never thought about it? Now, that's trading. Many times we interact with these things and we never realize, okay? Now, there's a variation of the same strategy. There's a variation of the same strategy. That would be another strategy by itself. Sometimes a level, you see that? Touch, reverse, touch, reverse, touch, reverse. But you wait for it to go and touch the zone again. Are you feeling comfortable about it? We carry on. I'll pick another pair. Look at this again. From here, you just need for two patterns to form and you'll be comfortable with it, okay? Two patterns. Oh, no, I think this is not a very good pattern, because this one did not touch. So this one touched, reversed, touched, reversed. There was no touch. It was a breakout. So you see, the setup invalidates itself. All right, same thing you would see here, okay? Bear touch, reversal, bear touch, reversal. There is no bear touch. If this candle touched and it could not break, you would call the next candle.
On the third?
Yes, on the third. It means the bears were not able to break the level twice, confirming that it's a strong level. Let me see, we have a similar setup somewhere there. I want them to align quite well. That's when I feel much more comfortable. This is breaking outside. It's not the kind of setup I'm interested in. Usually you'll spot this when the market is changing from one direction to another. What you might call from distribution to markdown, or from accumulation to markup here. This one would have been a potential setup. Like now there's a bear touch, a bull, a bear touch, bull. This candle did not touch my level, so invalid. And if you are on M1, you can get so many setups. M1 will give you so many setups. Bear, bull, bear, bull. Now you see this is a bull almost touching. It didn't quite do the work. Maybe above here you can spot a potential setup. Bull touch. Let me zoom it. Bull, bear, bull, bear. This one did not quite touch. Okay. The bull did not touch my level. My requirement is it must touch the level. It must touch the level. Okay. You see this one here? By the time these two candles printed, you can confirm it was a bear bull. Now the bear touches, rejects, the next candle goes up. Let me see. There are many such setups. See this one here? Unless you are a bit aggressive, not very good. Didn't quite touch because of this gap. You get this gap here. The next candle, this one closed above, the next one opened below. You see this gap down. So when you notice a gap down, you can draw it as a zone. And then in that case, a bull, bear, bull, bear, bull, bear. So this was your entry. And it's in the direction of the trend. So that would give you a safer entry. But I see it working even as a reversal setup also. Even against a trend, although I would still encourage you to trade in the direction of the trend. When the trend is like this, you would expect a breakout instead. You see now we are going against a trend, and that's the danger of going against a trend. But this one did not even touch, so that's a problem. It's nullified, did not even touch.
Okay, yeah.
I expect them to actually touch, and then that would. So the reason I added fractals is they'll give you a view of where you would expect those touches to be. Like now I see this. Let me show you what would be a very interesting scenario. If you see fractals aligned like here, they are almost horizontal. But horizontal, these ones. Let me see whether I can zoom this one. Okay, from the first fractal, what did you notice? This one. You will notice there was. I need to remove volume. It's interfering with my. I think I need to disable volume for now. Okay. You will notice this one touched here, reversed. Touched, far away, reversed. What happened? This one touch?
No.
So you see?
It has to really touch.
It has to touch. You see, when the chart is like this, you might think, oh, well, it has touched. When you are trading, try always to zoom. Always try to zoom. I think there could be a setup here. In my view, yes. There was a setup here. You can see clearly. And remember, this again is the trend. So this one reversed from here. This one reversed from here. Closed on the same level, you call immediately. If it closed slightly above the level, you wait for a touch, and then you push it up. So, brother, these things are there. You know, sometimes we just look at the market helplessly, and we wonder, which setups are these guys trading? So sometimes you see me giving signals in the group, and you're wondering, how do these people get these setups? Now this one becomes invalid. This one becomes invalid because it was broken. Had this candle not broken here below, then I would have considered this as touch number 2. But you see, it had broken, so making it invalid. So this now touch reversal. The next one breaks out. Now I might want to push lower, so long as there is a touch. Okay, there's a touch and a reversal. Now this one is, I don't want to have the body below. Touch reversal, there's no touch. It's a breakout. So I can always skip that. I think a few more setups, maybe a different pair. Which pair do you like? USD, CHF. There are pairs that I know are very crazy. From my experience, one of the pairs that acts up is mad a number of times is Euro USD. Not Euro USD, but GBP USD. That pair is crazy. At least from my experience, it's a crazy pair. The same with USD CAD a number of times. It acts up. Now, one that can also mess you up is Euro GBP, because now they are both from Europe.
I don't trade that pair yet. I have a bad experience with this one. I never even, I don't even load it.
Yes, to me, the most stable pair I trade usually Euro USD. You have a personal issue with it?
Yes, I don't even load it up.
That's interesting. That's an interesting one. Let's see 5 minutes, chat.
It messed me one time in Forex about a year ago, and I've never touched it.
Now, there's one thing you need to know about this strategy. Apart from horizontal levels, now remember, support and resistance could be horizontal, could be diagonal. What we call trend lines are diagonal support and resistance.
Yes.
Now, this is how this one works. If you see a market going up like that, now you may not even need fractals. Let me just remove them because they are making the chart look crazy. Yes. If you see the chart moving in the same direction, like here, and you are able to connect two lines, two lines, like, let me see whether I get a good example to illustrate at the beginning. If I pick here, is that a good setup? No, it's not a good setup, and I will explain why. Let me first get a working setup. You get the logic, then we'll try to see similar setups elsewhere. Now, that's not what I want. That's not what I want. Sorry?
Using diagonal levels.
Yeah, you can just do your regular, you just need to spot. Let me explain to you. Okay. You need to do this. You need to spot this. This one doesn't do the work well. Yes, that does the work well. Okay. You need, number one, you see what I was explaining to you on support and resistance? The same concept. You need to see a pattern like this, bull, bear, then you connect the two lines. Okay? Then you wait for a bull to touch the same line and not to close above it. Not this kind of long wick, because a long wick means price can still go up. So in a case like this, had this candle closed very near the level, not above the level, the next candle would still be a down candle. Now, what is key is the pattern must be the same. Let me show you a case where you are trading 3 candles. Let me show you. I don't know what this one will be. I just need to connect 2 levels. This one did not work. The good thing is the setups invalidate themselves. If I was to connect, I'm connecting here. What you observe is a bear candle. So red, green, green, red, green, green, red, green, green, you trade upward. So this is a complete setup. Now let me annotate it so that you can clearly understand. First, you see a red candle. The next 2 candles are a green. Then you see a similar pattern later, a red candle and 2 green candles. You connect the 2 levels on the body. Are we there? It was a red followed by 2 green, red followed by 2 green. You connect the 2 levels and wait for a similar pattern to form in the future. Red, green, green. You buy from the next candle going up. So your entry starts here. Maybe more examples will help you. More examples. Sorry?
That's another strategy.
Yeah, that's the strategy I'm sharing with you. It's the same as, it's the modified version of what I was showing you with horizontal levels. Okay. Where a candle touches, reverses, you wait for a third one.
Okay.
So this one is now based on diagonal support and resistance. Ideally, this could be like 2 different strategies. One using trend lines, one using support and resistance. But I like putting them together because then you will have a variety of setups on the market. When the market is trending, you can use trend lines. When it goes into a range, you can use support and resistance.
Yes.
Okay. So if I go back to 1 minute, we should be able to spot several setups. Now, there is one crazy thing with IQ sometimes. It does. Have you ever noticed that IQ sometimes will change things for you? Like you were trading with 10, the next time you open your chart before you realize it's 20 or 1. And then maybe, sometimes when you load your chart after you closed it, this amount can change.
Especially when you're on binary option, the binary one.
It will change, yeah. You will come to realize maybe it's 50 here or...
Yes, it has messed me before. I'm normally very careful.
All right, so you've experienced it, huh?
Yes, yes, I know.
So you need to watch that because sometimes the guys can just play, can act crazy. So here, I saw a setup. Let me show you how you can spot one. Red, or those green, red, red, green, red, red, green, red, red. I enter from there. Usually my expiry is about 3 candles. 3 candles. Now remember, if you are moving down, the slope should be like this. Don't draw a line that is like this and you're doing a put. It should be slanting downwards.
Yes, 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 yes.
And for calls, it should be facing up. So more setups. Let me see. When you try to draw these things and you see them acting up, you will know. For example, here. So I saw this one. I saw red, red, green. All right. I saw red, red, green, and I'm waiting for red, red, green, which did not work here. So sometimes you draw your levels, you wait for a setup, it doesn't work. Yeah? And as I told you, I'm better off for a setup not unfolding than entering a wrong setup.
Exactly.
Yes. So what happens here? So this is a kind of trade I would wait for. Okay. Bear, bull, bull, bear, bull, bull. Now, if it comes and the prints are bear, bull, bull, I'll proceed with it to the upside for about 3 candles.
Okay.
Easy to confirm. There is nothing weird about it. You just need 2 patterns on the same trend line or 2 patterns on the same support and resistance, and you're good to go.
Okay.
That did not unfold. Whether you say red, green, green, or red, red, green, green. So in this case, maybe I would say red, green, red, green, red, green. So you would have traded that also. But then for me, I would have preferred it comes down a bit before I could call it.
Okay.
Now from here, you can see a bunch of setups from here. If you were able to draw that, you saw red, green, red, green, red, you enter a call here. My brother, this is serious stuff. And it's not magic. You just need to use your eyes and confirm with 2 patterns on the same chart. Now this one is not acting up well because the red is not touching my line. I need it when it touches the line.
Okay.
Because it means the bears bounced from there. Like now here, that would have been okay if this candle stopped above the line by touching it and not closing below. Then I would call the next one because red, green, red, green, red, green. Clear?
Right.
So if I were to follow this trend, because I think the trend was very strong, now that becomes a wrong way of drawing it because this body is below the line. Okay. So the line should not cut through candles in short. It can cut through wicks, but not through candles, candle bodies. Now let me see. Sometimes, of course, no strategy is 100% sure. Sometimes you don't get what you're looking for. See how accurate it is sometimes? That if there's no signal, you will know there's no signal. See, like if you drew here, the next place you should have drawn was here. You get it? Green, red, green, red. So you are waiting for a green to close, touching the line. Nothing happened, so no setup. But what about here? See that? Red, green, red, green, this one. All right? The next one is invalid.
Broke.
Closest below.
Yes.
If you were to push it to this line, still invalid. Red, green. Now this one did not touch. So it makes it crazy. There's no setup there. Maybe here. All right? Red, green. But you see the next one is closest below. Becomes invalid. So if you follow this quite well, you will get a number of clear setups. The horizontal one works here. Red, green, red, green, red, green, red, green, closest on the exact level, put. Only one setup per your support or resistance. Don't trade the next one when it comes to the same level. And if you were to follow here, I told you if your market is ranging, you get a number of those setups. Red, green, red, green.
The horizontal line seems to be simpler.
Sorry?
Oh, the horizontal setup seems to be simpler.
Easier to spot, huh?
Yes.
They're easier because I think we read horizontally. It's the natural eye, yeah?
Okay.
So you see, touches here, reverses. Touches, reverses. Touches, like I said, if you see a gap, you wait for a touch and then you go up. See how it works, like magic? So you see, if you have several setups of you have several pairs open, and you just draw those levels and wait for the market to come to where you are, you would have a number of things.
All time frames, yeah?
Sorry? All time frames.
Okay.
You can go to 15 minutes. And now if you are doing this on MT4, you can use the indicator I shared with that tells you price is very close to your level. You see, like now here, I've already spotted my setup. You see this? I've spotted my setup. Red, maybe even if I said red, red, green, right? So I would say red, red, green, red, red, green, okay? Or red, green, green, red, green, green. Now I don't see it happening here. But if I traded, you see, as one line can have multiple setups. For example, this is red, green, correct? Now, when red touches, because of the gap, I wait for the next candle to touch before I call. This is what I was explaining. If you see a gap, you wait for it to touch. Don't enter immediately.
Yes.
So that will save you a lot of necessary OTMs. See that here? You just wait for your pattern. Okay? You just wait for a second pattern to form. So green, red, green, green, red, green, red. You see that? Until you have seen a second pattern, you can't draw the line because you don't want your line to cut through the bodies, like I explained. So when you saw this pattern forming, red, green, red, then you remember there was a green, red before. You use the highest body like that. Then the next thing you see, a green closing just at the body you put. Simple enough. Now I want you to play around with this. Now you are able to see my chart. Try to identify similar setups yourself.
It's a little bit small.
A little bit? Yeah, you can zoom. You can zoom. I can also give you a different pair so that you don't repeat the same ones that I've just drawn. Exactly. Maybe I give you your enemy. You don't like it?
No. I don't like that. And EPP and ZD, I don't like this too.
All right, so let's try Euro AUD.
Yes.
Let's see Europe and Australia, whether they have something for you. This is 15 minutes. Oh, and this adjustment from 5 seconds to randomly sometimes can mess you up. Where as you keep zooming, sometimes it will adjust the time frame. So you think you are still in 1 minute, you enter 1 minute trade only to realize the candle was a 5-minute candle. What do you call this kind of market?
It's a weird market. It's very rugged.
We call it a choppy market. When you see wicks up, down, it's not even a ranging market. By the way, we have 4 types of markets: uptrend, downtrend, ranging, and choppy.
It's choppy, yeah.
Now, the worst to trade, a ranging market is a nice one. A choppy market is a crazy one, where for almost every candle, it will go up fast, then go down, and then stop somewhere. So you see a wick below, a wick above. So wick above, telling you that this is telling you sellers are here, right? This long wick means sellers are rejecting the higher price. So the psychology would have told you now the market will go down. What do you notice? It doesn't go down. It jumps. the candle closed here after throwing a very long wick. So you think the market will go down. It cheats you by going down, but finally closes above. Now, it has no upper wick telling you it's a momentum candle by buyers. So if you were to follow candlestick psychology alone, you would think, now let's buy because of there's no wick on top. And then the market tells you, yes, we are going up. Then, okay, it closes it down. So now it leaves 2 equal wicks Okay?
Yes.
This is a high wave candle. You might call it a spinning top or spinning bottom, whatever you want to call it. Now, that is indecision, and you feel like, well, what's happening? I want to decide. Then you wait for confirmation. The next candle closes down. It's a strong bear. And you say, now, this is an evening star. Clearly, we are going down. What do you notice? Up. This is when the market decides to punish traders. Huh?
Sure.
But of course, when you are a careful trader, of course, you will have noticed a number of things. Number one, you would have noticed, for example, here, when this pattern, this candle closed where? If you go below, you would notice there was a resistance or a support previously. So this candle stopped in that, at that support that now becomes resistance. So if the market stops at that zone, the next candle is likely to go down, right? So this candle goes down, okay, all the way to this level, okay? And there's a reason. If you follow behind, there's a reason why it reversed from there. There must be a level. It can't just reverse like that. So the red candle stops here. If I think you go to the previous point, you will know why. There was a doji. A doji created a zone, a trading zone. I think there was a level here. The entire of this doji, top and the bottom, is a support and resistance. The whole of this zone, from the top of the doji here to the bottom of the doji. So that becomes a reason. So this candle just penetrated. Where were we, by the way? We were here, yeah. So you see it came and stopped at the zone, the doji zone. So the next candle goes up, hits this level, then bounces again. So what's happening in a choppy market, almost price is bouncing from almost any level, and you can't spot the levels very easily. Now, for this one, the level it uses is this week, the previous week. Now, remember, wicks are also support and resistance because it means the seller started here, pushing the market down. So stops here, goes down. Where does it stop? Previous support here. But what happens? These guys did not open from the level. They jumped and opened above the level, then broke the level and went down. Stopped at the level, next candle goes up. Okay? So if you check here, sellers are here and here. So there's a gap between here and here. The next candle goes up. Closes above this level. So anyway, we almost get into candlestick psychology, price action. And interest. Anyway, what I was saying is when you see wicks up and down, that's a market you should run away from.
I avoid.
Even if you are the best trader, this one will cheat you along the way. Because it will not respect price action, it will not respect volume analysis, nothing. It's just a crazy market. Nice markets are those where you see strong movement up and down, strong movement up and down, without many long wicks like this. Right. Now, a market you can also reverse is a market that has a mixture of candles. Here you can trade reversals. Some red, some green, some red, some green. If you see a very strong one, green, 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 and you see a single red, it may not always reverse. It may not always reverse. However, you may have noticed also that if you see many green upwards, the next ones will also be very many red downwards. Consecutive. So I wanted you to identify some of these patterns. Maybe I'll identify one more and let you carry on. Maybe there's a problem with some of these setups here.
You're considering the, okay.
You see, until you see the second candle, second pattern, you'll not be able to proceed. So here, the body is there. That's the last body. You can zoom. So touches, reverses, touches, reverses, touches, reverses.
So in this case,
but still, I would have waited for it to move up before I can push it down. That
so
is.
In this case, sorry, just go back, kindly.
Yeah.
So in this case, you started with this one.
Yes. Okay. You just have to spot patterns aligning on the same level.
Okay.
Yeah. Because now, if you try to use one, there's no other pattern aligning with it. This one. Like I said, you must spot a second pattern, and then you are able to connect. Because now, if I see this, I cannot connect with anything. This alone. So I must see another one in the future, and then I connect the two. Like here, I've seen this, I have seen this. Now I can try to see. So let's assume this is a live market. So we are here. We are like here, okay? assuming this is a live market. So when you are like that, you spotted bear, bull, a bear touch, a bull, a bear touch, a bull. Now you can connect the two and wait. A bear touches, right? And there's a gap. You wait for the next candle to touch, you push it up. Did you see that? Yes, that's how you should trade this technique. That's how you should. It is very simple. It is actually very simple. If you are on 1 minute, you should be able to get a number of valid setups. Okay. Now look at this. I saw bull, bear, and I wait. Bull, I'm expecting a bear, right? But because there's a gap, I wait for me to touch the line, and then I do a put. That's a winner, right? Are you following?
How is the win rate for this?
This is crazy. This can give you 80 to 90 on average. Yes, all the strategies I'm sharing, by the way, are on average. Of course, with the human error, they will give you around 80% on average. And you don't even need 80%. 70% is good. So assuming you have an error margin, and you drop at 70%, there's no harm. 70% is good. Actually, from 60% upwards, you're still good. So all you needed is, by the time you saw this setup, that's the logic. Just see two similar patterns, and you're able to connect them. Don't ever cross the body. The line is at the body, exactly at the body. Other bodies can be below it, but other wicks can also be above it. Then you wait. So what were you waiting for? A bull to touch it. In other words, you are predicting a similar pattern, third pattern. So pattern number 1 here, okay, yes. Pattern number 2 here. So you are predicting that a similar pattern will form here. Yes. And how do you predict? By waiting for the first pattern, the first candle in the pattern. It was green, followed by red. Green, followed by red. And now you have seen a green. Your assumption, the next one will be red. But because this is binary, it doesn't have to be red. So long as it closes below your entry level. So carry on now. Try to see similar setups, or do you want to have an off time?
I was going to do one here. Let me see. See a pattern here.
All right. Let me just enable the chart. All right. Carry on.
Enable in what way?
Sorry?
I can. Do I have controls for the chart? No. I wanted to draw a line here.
You can't access the IQ thing?
No. Yeah? No.
Huh.
Is it possible, really? I even don't know. Is it possible?
I don't know, because if I try to make you a host, then you will become.
That's another story. Let me draw one here. You tell me whether it works. I was trying to draw. Let me delete this first. I was trying to draw a line here. I saw a pattern. Where were we?
You are drawing on IQ?
Yes, on your chart.
All right, it's there.
Yes, I saw a pattern. Yes, here.
You can take a screenshot, draw it, and then.
You can't see my drawing?
I'm seeing it. I'm seeing it.
Yeah, so I saw this red and green.
Mm-hmm. So red and green, yes.
So that red, I saw this green, I saw this red. So and I wait here.
For a touch.
Yes.
Very good.
And my line is on the body of this candle.
Yes, the green candle. At the open of the green candle, right?
Yes.
Just make sure no body is below the line. If you are going up, no body should close below the line in your drawing. If you are going down, the line should be above all the bodies. At the highest body, that is.
Red, green. Where is my arrow here? Red, green. Red, green.
It's called technology. And you wait for a touch. You see?
I'm comfortable with the horizontal. The diagonal one seems to be a little bit.
It's a little bit tricky.
Yeah. Could you move the chart to some other place?
Yeah, I can. Let me just clear the chart first.
Yes, please.
And Probably even changing the time frame to 1 minute, because we have new
Yes.
candles. Because time frames also give you new candles.
Yes.
So we are here now.
Yeah, that's better.
If the market is trending, you are most likely going to require. Where do you think the horizontal support and resistance works best? At accumulation and distribution. After a long move down, you expect a market to range, and then it will continue.
Yes.
Exactly.
Red, green. I don't know why this did not work here. Anyway, I don't like the diagrams.
But why are you drawing it like that? We agreed. We agreed you cannot draw a line sloping down below the candles. It should be above the candles.
Yeah. It's only this works for uptrend. Yeah, sorry.
And the number two, the setup is working, by the way, if you didn't know that. Because look at it. Let me show you why. This is number 1, setup, right?
Yes.
This is number 2, setup, right? This is number 3, setup.
Oh, I did not see that. Yeah.
Are you timing this one? This will be the
Yes.
second signal.
I was only looking at that. Yes.
Okay. So again, you're not supposed to do that. If you were supposed to do a put, and I know you have realized that, then you should be drawing above the candles.
Okay.
Because now when we are moving downward, we are making lower highs and lower lows. But if it's an uptrend, then we are drawing below the candles, because now we are making higher highs and higher lows. So in that case, your line should be somewhere like you are drawing like this. Okay.
Yes.
And you know, like I'm drawing it randomly, bear, bull, bull, bear, bull, bull, and I'm seeing here there's no bear, bull, bull, so invalid. I like the way my strategies work, because it's easy to spot when a trade is not valid.
Yeah, exactly.
Yeah, it just tells you this is not going to work. Just leave it alone. Yeah. But of course, there are a few cases where it will work and still fail. Yeah?
Yes.
So what do you think of this technique too? Now this is your second arsenal.
I'll work on it tomorrow.
Mm-hmm.
Let me show you something.
Even here, you can see one.
Hmm?
When you learn to spot these things, you start seeing them everywhere. Check here. This. Yes.
And the one downside?
The one
there's a doji here.
There's a doji that destroys the whole thing. Yeah. The doji destroys the pattern. It may work, it may not work. I like when it's similar, because it simply says sellers and the buyers exchange at that level. Yes. It's like relays where you run and give give the to another guy to run with again and gives.
So here I can draw this and go to the future and wait to see whether I'll get a pattern there.
Let me give you a variation of this strategy. It's a separate strategy on its own. A variant of this. One of the things you can also do with this, you can add your good friend called Bollinger Bands. Okay. If you see me trading with the Bollinger Bands, you may think they're not Bollinger Bands because of the way I customize mine. I enable that is upper line is red, lower line is green, because I'm going up from there. And I disable the middle line. I don't need it. So you will think I'm using a different indicator, but still moving our Bollinger Band. You saw what I did? Period 20, the usual period 20. Okay. Now with the Bollinger Bands, I also noticed same behavior. Now remember, Bollinger Band acts as support and resistance.
Yes.
So if you see a similar pattern forming, look at that. Let me show you. And this is another strategy. So, but because now you are willing to learn, I'll show you. For this one, you don't have to wait to two different patterns to form. You wait for candles to close outside the Bollinger Band, form a pattern like this: bull, bear. Now you draw your zone, body to wick. You wait for a candle, a bull to close inside the zone. You push the market down. Okay? Inside the zone. Okay? So here, the market reversed from here. The body, How did I draw my Bollinger Band, by the way? I think I disabled the bottom line. Yeah. This is the one I wanted to disable. Because it looks weird. It looks very narrow.
Yeah, exactly.
Doesn't look like Bollinger Band. So that should be, this one should be the one. This is the lower line. Okay. Yeah, it was worrying me, but the upper line was still fine. So what I was saying is, you would wait for a candle to reverse from outside the Bollinger Bands, like here. So it came all the way here, bounced all the way to the top, meaning that was a clear reversal. All right. Then you wait for a candle to close inside the zone, a red one. Then you push the market up. Okay. You draw. There was a reversal here. Body to wick. Green closes inside the zone, push the market down. So I can tell you in short, I'm full of strategies.
Close inside the zone.
It must close inside the zone, yeah, because that's why you expect. This is the seller's zone, this is the buyer's zone. Okay. And a number of times, if you know the market's not very strong, you can trade the touch of the upper line in the zone, touch. But if you want to wait for a candle to close, wait for it to close inside the zone or at the body, at here, at this line. Are you getting me? Because the sellers begin from this body here all the way to the wicks. So if a candle comes and closes at the first line, the sellers will push it down. If it closes inside the zone, they'll push it down. If it goes and closes here, it will be pushed down many times or most of the time. So there are cases where you may not see that happening. There are cases you will see that happening. If you see a strong momentum, red, like I told you, you can't stop the market. You're aware of that. Yeah. Okay. So the market reversed from there. Did it even close inside the zone? This is the last body in that range. You see, stopped here, but because of momentum, it continued. So you need to be aware. But when this happens, you have lost this trade, wait for the market to come back. Closes inside the zone, the next candle wins. Now remember, a broken support becomes a resistance when market comes back. So that could be your second strategy if you wanted to trade it. The setups are everywhere. Look at that. So candles closed outside, went back up, you drew your zone, wait for a candle to close inside the zone, or slightly. This made a slight close below, but never broke this week. You can still call above. Remember, this was a rejection.
That's for 1 minute. Huh? This
Yes.
works for 1 minute.
This is 1 minute.
Does it work for other time frames?
Yes, price action works across all time frames.
On the same settings for the Bollinger Band.
Exactly.
Okay.
I'm using standard Bollinger Band settings 20-0. Okay. That is period 20 deviation, standard deviation of 2.
Yes.
Remember, by default, IQ will give you 14.
Right.
If you try to add Bollinger Bands by default, when you go to add and you start typing Bollinger Band here, these guys by default, they will give you a Bollinger Band that is 14. So always adjust this to 20.
Yes.
So Jeff, those are 2 strategies in one today. So you will have a benefit of taking home 4 clear techniques. Like you see, one beautiful thing with the way I trade is there's no guessing. I have told you clearly, this is your support. This is the level you draw here. Body to wick. I'm not going to tell you wait for something and something else. Why? You know, sometimes this guy refuses to draw, right? Sometimes this guy refuses to draw. Okay. Where is the body? I didn't get it right at the body. There is the body. Okay. So you just wait. The market will go close inside. What did you notice? Red. That's a red candle. And if it breaks above the zone, we'll come back, close at the zone, next candle wins. So you can still hit the zone. Look at how that level works over and over. It's a support and resistance over and over. Okay, when broken, it will be respected later on. Broken here. Could
Could you go back there?
Back to.
So I must wait. I must wait for the candle that approaches that area to close first.
I said if you want to trade a touch.
I'm not supposed to trade this. To trade these two candles here.
Yeah, those ones have not closed at the level. Like that's what I told you. Look at the gap.
Okay.
This gap means buyers can still move up.
Okay.
The only time you can trade, like I said, again, that's a risk entry, if the green candle does not respect this level but still goes and touches the upper line, then you can do a touch where you expect your expiry to be the close of the candle. And that's exactly what happened here. Touch the level, but closed below. You get it?
Alrighty.
And that will give you 2 entries. So you trade a touch, the candle closes inside the zone, you push the next one down. So 2 entries. So in your case here, maybe you spotted that's where the market closed from, reversed from here and stayed above. The wick is here, closes inside the zone, you call. So
But,
this, now remember,
okay.
am I using?
This level here is a previous level. You're not drawing from these 2 candles.
I've actually drawn it from these 2. Can't you see?
They have not closed outside the band.
They have not closed outside. They don't always close outside. Reason being, for me, if the reason I like closing outside because I want to see the market reverse upward, then I know the level is strong. So here, this one's formed and the market stayed above that for long, meaning this is a strong level also. You see, after these 2 patterns formed, this and this, giving you a support zone, no candle was able to break below it for how many candles? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Those are very many candles. So it created a range. So when it came back to the zone, you would expect buyers to act. Because they reacted here. They stopped all these many candles and they stayed above. They were exchanging a little bit of, transactions there. So it is a very straightforward strategy when you apply it and you know what you are doing. Over and over, you will see the setups. Over and over, you will see the setups. A number of them may fail, but you still get to get your entries. Like you see this one. Now, problem with the gaps. Problem with the gaps. But still, fake breakout. This candle closed inside the zone. So you go down. Closed inside the zone. But only one setup. You don't trade. Look at this if you traded the touch.
Yes.
Okay. So I don't want to make this video too long. I think that should suffice for now. So all you need is to go to the chart and practice. Look at these setups, spot them, and act on them. Of course, the most ideal are those that happen outside. And you see, like,
could you draw that one? Yeah. Could you draw that one? We see.
Yeah, look at this here. And you need to be aware that if the market goes, comes down, bounces before touching, goes up again, comes, then that becomes a level that can be broken.
Okay.
I need to explain that because you see it went up, came down, avoided this. Went up, came down, avoided coming here. Avoided coming here. So it's going to build the momentum, and when it's coming next, it's very likely going to break that level. And exactly my fear. So the best setups are those that happen very close to one another. Like here, you see, if it forms here and comes without going too far above, then it's likely to work because it means there's no serious momentum that has been accumulated by sellers. So you see, when you see a candle close inside here, I think I didn't draw the line well. And that is the case, the body is here. You notice, closed inside the zone, gives you a good entry. If you were to trade with this, then you would have been forced to trade a touch, which did not happen. But still closed inside the zone, maybe you would have lost here and still closest inside the zone, you would have entered that for the second setup. For this one, your level is here. Now this is a case where you trade the exact close on the level. Body is here. The wick is here.
It's the body of the red candle.
The tallest, the highest body. It's just like the other strategy.
Okay.
Yeah. So in this case, the candle is very close to the body, very close to the level. There's no gap really. You can say that buyers can try to go up. So in a case like that, wait for a touch, then push it down because it's closed at the zone. Or you would have traded a touch upper.
Yes, I got it. Yes, yes.
So there are multiple options for you. So I think I would want to stop here, get your feedback, and wait for you to go and test it and share with me your feelings about it.
That sounds.
The patterns are everywhere. I told you they're everywhere. See?
Mhm.
So long as you have seen a pattern forming, yeah? So long as you have seen a pattern forming, red, green, both touching the line, red, green, then red, green, you do a call. No one's going to kill you. And you still see this and this, you try to connect the two, maybe they'll give you a setup, maybe they will not. As it is, let me see if I can extend the line. So this is red, green, and if I extend with the next red, green, can I get a setup? Yes. Did you see that? Red, green, this one did not touch, red, green. Or better still, there is a red here and the next one touched because we said we wait for a touch if the candle closed above the level. So there are many variations. That's why I said you might want to consider adding fractals if you feel a little bit not very comfortable. They might ease your work, but they are not the most accurate I would recommend. If you see two fractals like this, many times, if you connect the bodies of the candles, they'll give you some setup many times. That's not what I trade though, okay? That's not what I trade though. You see, like now this is going to start giving you chaos, okay? The best is when you spot them with your naked eyes and you can see for sure there was a change. Here, change. Here, change. Breakout, so invalid. By the way, did you also know that you can trade pure touches of these levels? If you spot a nice angle, like a 45-degree, come on now, that's where I have a problem with these things called IQ charting. I like them spaced. Let me make a fractal a little bit bigger, not 5. These are just bonus strategies. If you work with, say, 7, okay, you can work with 7 fractals. That's 7 period, meaning 3 candles behind, 3 candles ahead. It might give you an advantage. Let me see whether it can give you the setup I'm looking for. Look at that. Okay. Weak, you wait for the next touch. Let me see whether it can give you another one. Connect the weak, In this case, gives you a losing setup. All right. Yeah, those good levels. I like nice swings, a nice swing and nice wicks. Weak. This might work. A week and another week. See that? Week, a long week. And the fractals are on the long weeks. That's what I'm talking about. The arrow is here. A long week, a long week. The next touch. Can see that? Let me see whether I can spot another one. Now you can't go up like this. I know that looks like, that's very tempting though. Yeah? You get a long week, still whenever it touched it. But of course, now remember for this arrow to be here, these 3 candles should have formed. These 3. But you see the next touch gives you a nice winning trade. Now, if you try to take this, connect this and connect this, do you see that also wins? If you are going down, you look for wicks to the from the upside, wicks from the upside only. Okay, like that. Now you see this one is touching before it completes this. Because for this dot to appear, these 3 candles should have formed. But you see, we are touching before the dot, so that's not a valid. You cannot say the fractal was here. Yeah, so I think that should help. Let me give you a last example. Look at that. Look at that fractal. fractal with long wick, the next touch, close below. So my brother, that is it. So I think it's because we were just the two, not many in this session. I was able to share like 4 strategies or 3 in one. So, and that's an advantage for you because I really want you to have an array of things you could trade. Now, I think with fractals, you feel much more confident not to choose, not to guess your levels. There are cases where this will fail you, like here. There are cases where it will fail you. But I can tell you for free, if you draw a level like this and a candle closes above it, the next candle goes down.
Just okay.
I don't know whether you are aware of that, but I will show you. If, in other words, if that becomes an OTM, you still enter a put in the next candle after the candle closes. Many times, that's how it works. If you go, which way? Now, this is where it becomes tricky when you start seeing many of them close. I like them being distant. Let's change the pair so that we don't just capitalize on your Euro AUD. A few more setups. That was not our primary strategy, but I thought I would share with you because you might find a way of fine-tuning it later.
This is 5 seconds. Huh?
Oh, IQ, I told you, these guys. And that's where you enter trade and you see candle closing very quickly. You think, what happened? Maybe you just realize you entered with a wrong time frame.
Yes.
So never worked out because of this, and this I was expecting to be touched. Never worked out. For up one, I saw this. Oh, it has been cut through. Yes, I saw that. Long wick, fast touch. So, and here, maybe it worked or it didn't work. I like it when both touches are long wicks. See that? Also worked. Touch. You see touch? Closed above.
Yeah.
So it works very many times. So long as you are able to just be careful to pick good swings. Not very close fractals. There should be a real gap between them. Like now from here to the next fractal, there was a nice decent gap that you see in the next candle will just give you a clear win. So, and again, now you can't draw this because I don't see any wicks. These are tiny wicks. The best are long wicks. Long wicks. They give you very nice setups. Long wicks. Long wicks. See that? Long wicks, touch. Okay? So this is what I'm saying. I didn't have to take you through a course to teach you this is a bearish engulfing, this is a bullish pin bar. You know, you will get still and may not be confident. But when I show you this, you'll say, fine, I know what I'm looking for. Yes, that's what I call, this is what I want my college to be for. Yes, I just teach you, go to the market, look for exactly this. When you see it, hit a trade.
Exactly.
What did you find by mode of operation? It's not a full course, but do you find teaching somebody on a technique like this something good?
Yeah, it works especially for someone who has a background.
Yes.
Not for beginners, of course.
Yes, of course, for beginners, they need to understand what a red candle is, what a green candle is. The assumption is that these people have been reading, you know, and that's why I said very clearly that people have been in the market for too long. They have taken courses, they have read on the internet, blogs, websites, they have watched YouTube videos. So they know what binary options are, they know what call option is, put option is, trend lines, Bollinger Bands. The question is, they're not profitable. Why? So they have put all that content in their head, but they cannot convert it into a working technique. That, you know, trading should be procedural.
Yes.
It should be a procedure. It's just like a doctor. He cannot take you to theater and start doing things. There is a procedure. They call an anesthetist. They'll give you that medication so that you are numb. Then they'll start doing step by step. You cannot randomly start treating a patient. So, and that's where we go wrong. We face the market like gamblers. You see a red candle and you think the rejection week says the next one will change. No, have specific rules that if condition 1 is met, like here I'm saying, if you saw 2 fractals where one is a long wick, another one is a long wick, connect them, just the tips of the fractals, and wait for the candle to touch the level. Now, of course, I know you are not going to ask this one touched, because you know very well we are using 7 period. It means for this line to have appeared, this candle must have completed forming. So by the time you are drawing the 2 lines, price is here.
Yes.
Right? So you can confidently draw the lines and wait for the next candle to come. So all you need to do is just be checking your chart as you move from this to this and wait for, as you see the next candle approaching the line, you're waiting. It touches here and you know you have like 30 seconds remaining, you do a call.
Yes.
Before the candle expires.
Expiry at the end of the candle.
Yeah, it should expire at the end of the candle, not the next candle.
Running candle, yes.
And you know the market will reward you for being patient. Huh? Yeah, the market rewards you for being patient.
Yes.
Okay. So we can still continue. I've covered a number of techniques. So now, tomorrow we can do a recap and I can be able to add you another technique. Maybe, if you want me, I can also show you a technique that's based on indicators only.
Okay.
Are you comfortable with that? All of these are price action techniques, by the way. Bollinger Bands are price action tools. Trend lines are price action tools. Fractals are price action tools. Moving averages are price action tools. So I've not shown you stochastic or RSI or anything like that. So I'm yet to show you an indicator-based strategy that also works beautifully.
Okay.
Yeah, but they're there. They're there. They're there. You see, when I stop at a ranging market, you start seeing setups unfolding. Eh?
Yes, yes.
Eh? You see that, you see that, you start seeing them.
The one to the pattern.
You see that, yes. This one touches, but this one did not come, so that is one that you would have skipped. Ideally, you also know that if a fractal has been broken to the upside, fractal resistance, if it's broken, when a candle comes back to that zone, if a candle stops on this line, you can call. Okay, but now what happened is a breakout, no touch. Same thing is happening here. You have those 2 fractals. You can use the higher body because there's a fractal here, there's a body here, and there's a body. This body is lower. So you draw at the body and then include the wick. So that becomes a zone. If the next time the market comes and closes at the level, you see that? You see that?
Yes.
Closes exactly at the level. Then you put. So the market is not random. It's not random. Only that when you are facing it with emotions, you feel like now these guys are just manipulating the market. And that is, I've not even shown you how to use volume. But I know you have taken a VSA, so you don't need volume here. You can add your own volume as filters. For example, now when you are here and you have drawn when you have drawn, I picked the wrong line. I wanted an horizontal line. When you have identified this as your zone, your resistance zone, and you want to decide whether this trade is going to be valid after closing inside the zone, then you can check volume. Volume is under widgets. So you look at what kind of candle formed there. So this candle closed inside the zone. Can I put? I check volume. Look at the volume for this candle. Huge candle, look at the volume. Tiny candle, same volume. Anomaly. Correct? Yeah, then you put confidently. It means here the buyers used a lot of effort to create a very tiny candle. So in this case, effort is high, result is low. Sellers will come in. So you can add volume if you want. Nothing stops you. So you see the level you drew here, worked here, market comes and breaks this level, okay? Goes and breaks this level, a candle prints inside the zone with low volume. Call. Prints again, low volume. What kind of VSS signal is this? No supply.
It's no supply.
No supply at a support zone or a demand zone, you call. These levels that I'm drawing with Bollinger Bands, you think they're just natural level. They work over and over. Look at how it's working. Stop the market in the zone again. Look at that. Candle is small, volume. Candle is bigger, same volume. Anomaly, once again, you call. So, my friend, there's a lot. We cannot exhaust the techniques in the market. There are many.
Very interesting, yes.
Yes. So I would like us to end unless you have questions. We have taken 1 hour, 45 minutes.
You have a paid Zoom, eh?
Sorry?
Now, Zoom, you paid this one.
Now Zoom, when it's one-on-one, it can go forever.
Oh, really?
When you have more than two, when you have more than one participant, when there's one host and 2 or more participants, 40 minutes. If it's one host, one participant, forever.
Okay.
So if the other guy had joined us, we would have been timed out at 40 minutes.
Okay, and then do it again.
Exactly, yes.
I think what I will need to do now is will you send me the recording? Of course, I think I've noted. Can you send me also the recording now?
I will send you the recording. Just guarantee you will not share it with anybody else. It's my own use only.
That's my word.
Because it's your
I
effort.
give you my word, brother. I give you my word.
Yeah, so I'll share the today's because I think it has been recording also, and yesterday because I managed to record it and I was able to combine. I think we had 2 sessions.
Yesterday, yes.
I don't know whether I was able to combine them or I need to share them separately, but either way, I'll still give you these things because you need to review what we were discussing.
Yeah,
it's for your own good. So what I would
today was loaded.
Sorry?
Today was loaded.
No, yeah. I think we may have overlapped several techniques, probably 4 or 5. I think so, because it becomes interesting when you are speaking to other people. As you explain something else comes to your mind, and that's what it is in trading. That's what it is. That's what it is. Yeah.
So tomorrow I will explore. Test on. Historical market and the live market also.
Now, I will allow you to go and test this on your own for free. Okay?
Mm-hmm.
This is something I'm mentioning for you because I think you came from the indicators world also, right?
Mm.
You have tried indicators before. Now, go and look at Bollinger Bands period 20. This is for you to go and look at it and get back and give me your results. Okay?
Mm-hmm. Mm-hmm.
I have observed this over and over again, that when a candle completely closes outside the Bollinger Bands, completely, it's not even touching, not even the wicks. Look at this. If you zoom, nothing, no wicks, nobody touched this lower level.
Mm.
The next candle is up. Look at this. Let me see whether I can spot another one. Look at this. The whole candle range from high to low is below the line. Next candle goes up. So people say indicators don't work. They just don't know how to use them. Look at this. The whole candle from low to high is outside the upper band. We are going down.
Yeah.
The entire candle, low to high, up, we are going down. So do you still believe when people say indicators don't work?
But there's one that failed here. Anyway, it cannot be 100%.
Look at this. Also, you don't expect 100%. After all, you don't need 100% to win. Even this one failed.
Yeah.
Even this one failed. Yes. But you see the next candle closed again outside, a tiny touch, you would now martingale if you wanted to martingale. Very accurate technique. Very accurate technique also. I would like you to test. Look at this. Completely outside. In. Completely outside. Completely outside. In. Again, completely outside. In. So don't tell me I'm a magician. Sometimes you will lose, like here. You will lose again. You will lose again. You'll win. You should be happy losing a few trades. Follow the rules. You win here. So if you are going to win 10 trades and lose 3, what's the big deal after all? Completely outside, you win. So as long as you are winning more trades and losing a few, it's not a big deal. You're making money, you're in profit. What is chaotic is where you're winning half, you're losing half. you blow your account, because when you lose 100%. When you win around 85%. Yeah, and that's to the broker's advantage. If the brokers had given it a 50-50 chance, when you win 100%, when you lose 100%, then we would have an advantage also. But they already have an advantage because you will never make 100% of what you invest.
Can I have a business at my door?
Yes.
What do we do?
We will end it here. So thank you for attending the session. See you tomorrow.
Sure.
For another session, right?
Much appreciated. Then I'll do my work tomorrow.
Yes.
And then get you back to you.
All right.
Thank you, sir. Thank you.
Yes. See you later.